Hello guys, welcome back to Castaway Trader YouTube channel. Today we will talk about my counts, my charts I post on my Twitter account and StockTweets account. I really want to explain you how I approach trading based on those charts and what is my logic behind those stop levels and target boxes, and I hope that would help you and hopefully you will start following me and hopefully trading and making some money. So this is my website www.castawaytrader.com. I would appreciate if you visit it and check my latest updates I post there. You can also follow me on Twitter as I mentioned. Please read that important information disclaimer. Okay, what this video is about. I keep posting charts on Twitter and I have already posted over 1000 charts, but I'm still not sure you really understand what this is all about, and so how I approach trading of those counts and how and why I set specific stops at the place, at the levels where I set them. And so what I decided to do is just to convert a number of those tweets into some story, like Instagram type of story, and showing development of Russell futures for the past week from 23rd of March until today. And all charts which you will find in this video were posted publicly on Twitter and StockTweets. And I will show you timestamps and you will see the dates when I posted them. So I did not add anything, I did not exclude anything. I will try to explain my logic behind those target boxes and stop levels I draw on my charts, and I will tell you about my mistakes. We will discuss why I let myself get fooled by the tape and how I reacted to those mistakes, because everybody does mistakes and you will do mistakes. All pros does mistakes. What distinguishes a newbie from a pro is that how you react to those mistakes, how fast you understand you got fooled and what you're gonna do about that. So do you have a plan B? So we will talk about that. And hopefully you will regret you have not followed my accounts before, and hopefully you will start doing that now on. So let's get rolling. So that was my first tweet posted on 22nd of March 2018 at 9:47 p.m. And what I saw at that moment is that we got ABC down of wave 1, pretty nice looking corrective move up in wave 2 up, and it retraced 50% of the decline. And then we had to get the most powerful decline in wave 3 shaped as ABC, and we got A down, B up, and C down. And that was my first mistake. So I thought at that moment it was 10 p.m. and probably this is my only excuse why I made that mistake. I for some reason decided that's the bottom, and I posted Russell has reached the target for the wave 3 down, now we need corrective ABC up in the wave 4. And almost immediately, frankly speaking, once I posted that, I realized my mistake, and my mistake was in that number, 158%. Under Harmonic Elliott Wave, we have a very strict rule that a wave 3 can bottom at least at 176.4% extension of the wave 1. And here it stretched only to 158. And in no case it could have been the bottom of wave 3. So most likely it was just the wave 3 of C of 3. I will show you what I mean later. But I posted the chart, and because it got a parabolic drop at that point, so I understood that in any case we should get some corrective move up. And if you can see, if you can look at that chart, you will see that price never moves in a straight line. Even if we have some segment where price moves in a parabolic way, it will almost immediately start moving in opposite direction in the same wave. So price keeps moving in waves: A down, B up, A down, B up, C. You see, A, B, and C. Okay, let's get to the basic fractal, our model, just to understand where we are. So here was the top made by Russell in January 2018, and in the most bullish case we can get a corrective ABC move down, and that was very sharp A down, then corrective looking B up, and here we are in the second leg down, which has to be shaped as 5-wave move down. And we, at that point, we were somewhere here. So the question was whether we have bottomed in that wave 3 of the larger C. And next day in the morning, I think it's Eastern time, frankly speaking, I think so, we should add 3 hours, so basically it was 8:48 a.m. Eastern time. When I posted my morning chart, I have already changed the count, as you can see here. So if here was 3 and I thought it's a bottom of the larger 3, here I changed my mind and basically I posted, I see another ABC down in Russell before the wave 3 bottoms. So I correctly mentioned that, it noted that we got ABC up, and that was a corrective looking pullback. And I thought, okay, so at that time it should get to 176.4 extension. It can even stretch to 200% extension, but not less than that. So we got corrective looking up. We still had our target for the wave 3 lower, so I understood it could only be a minor 4 up. And if we have a 4 up, we need another ABC down, which would complete that wave 3 down. And this is exactly what I wrote in my post. So 1 hour later, we got the very nice reaction of the target area I posted in the previous chart. We see we have those corrective ABC up, and again that C up got stretched and got really higher than I expected a little bit. But as soon as it topped and the price left the target box, we could say, okay, it seems like we have topped in a corrective looking wave 4 up, and we should immediately put our stop on that top, because a typical structure of the wave 5 of any degree is that subwave A would decline to the previous bottom in the wave 3, and then we should get some corrective B up. And B up may retrace 50%, 61.8%, 76.4%, or even 98% of the decline in wave A, but not more than 100%. In no case wave B should penetrate the top of wave 4. If it does so, that would invalidate the count. That would mean that most likely we will not see the price hitting the target. We will not see the price even getting back to the previous low. So my next tweet was the count where I considered subwave A having bottomed. As I have just mentioned, so wave A typically stalls around the bottom made in the wave 3, and then a corrective move up starts. And I use Fibonacci fan starting from important tops and bottoms, and here I have two sets of them. One is the red one and one is the blue one. As you can see, we have a nice crossroad of them somewhere here, so those both lines is 76.4%. And in addition to that, we have a very specific FIPS here. So once wave 3 on a lower scale stretched to 176.4%, which is wave 1, 2, ABC of 3, we could expect that the price would come back to 138.2, 123.6, or 100%. So this is why I saw a confluence of FIPS, horizontal FIPS and diagonal FIPS, and I put my target box here. 1 hour later, price got even higher and it approached my target box for corrective wave B up, and boom, look at that, just 2 hours later. So the chart was posted at 10:30. At 12:50 we got a really nice impulsive looking decline, and this is exactly how wave C of 5 should look like. Okay, so that was actually Friday, and again we are talking about not Eastern time. So in terms of Eastern time, it was 3:54, so it was 6 minutes before close. And what we had here, we had a structure which might be considered 99% completed, because in this case, look at 176.4 extension, and we got to 176.4, and we have almost reached the next important level, next important FIP, 200% extension. And we could get enough waves in that move, because wave C had to be structured as a 5-wave decline, and we could easily get it. It could be 1, 2, A, B, and C of 3, 4, A, B, and C of 5. So we still had potential that the price would really stretch to the target box I said days before at 15:05. At the same time, we were at 15:15, and we understand that as soon as that move gets completed, so the reaction might be very strong. So wave 4 could easily stretch at least up to here. So that's why at that point, 5 minutes before closing, I bought some TNA. It's a triple ETF on IWM, because I don't trade futures, unfortunately. I only trade ETFs. So that was the Friday closing time. So the next tweet I posted was on Saturday around 9 p.m. Eastern time, and at that point it was still not clear whether we have topped or not, because micro-wise, again, that wave 5 should have been shaped as ABC. A, B, and C, and that C had to have 5 waves, and as I've just shown you, we could count it as 1, 2, ABC of 3, 4, ABC of 5. That could have been the bottom. At the same time, we could have counted it differently. It could be ABC of 1, 2, ABC of 3, and small a, b, and huge C of 4. So both counts were valid. But harmonic Elliott wave gives us a lot of checks, safety checks, which should protect us from mistakes. So if we were under that count, so that spike was supposed to be B of 3, and in the same way as top of 4 should never be breached, the wave B of 3 should never be breached by the wave 4. So I could set my stop loss at that point and understand, so as long as we under that point, we still have potential for another low in that wave 3. But at the same time, we had another option where we already have bottomed. So let's see what happens next. So that was another chart. I just added a regression channel to show you how price moved nicely down along that two trend lines, upper trend lines and lower trend lines. And here at that point, at 9 a.m. and 9 p.m. Of Sunday, basically I've already put that stop for shorts. This is the one we've just talked about, and I've already added a target area for the wave 4. So here we could start calculating our reward risk ratio. We could understand that basically where the corrective move up could stretch. And I also posted that basic model on Sunday just to explain people where we are. So as you can see, that potential for decline was very small, and at the same time we were facing an impending inevitable reaction in a pullback shaped as ABC up in wave 4. And this is Monday morning, 9 a.m. and this is what we got overnight. It was a really huge rally, and we could say that it's only wave A, because to consider it ABC up, we should have seen a really well pronounced B down, and here we just can't see any meaningful pullback. That's why I posted that even though Russell did not give me expected one more low and instead just taken out the critical resistance overnight, that confirms completion of the larger wave 3 down, and this move up I count as the wave A, the first leg of correction up. And that was a great setup. So it was not a good idea probably just to short that move, but at that point I unloaded 75% of my long position, and I started to wait until the price gets into that green zone, into the green target box. That was 9 a.m. in the morning on Monday. Okay, by 10 a.m. we got the first leg down, and we got a corrective looking move down A, B and C, and that could have been all the way B. The only problem is it was kind of shallow. I expected more deeper pullback, and I explain you why I expected that. So there is a pattern which I love. It's pretty reliable pattern and I use it all the time. People call it head and shoulders, I call it launch pad. Look at that top. We made left shoulder, move down, the head, move down in right shoulder, into the neckline, right shoulder, and new decline. So we got our head and shoulders, shoulder, head, shoulder, decline. The same thing we keep seeing at the bottom patterns. This is basically what I expected. I thought, okay, that looked like the left shoulder, retrace to the neckline, the head, huge move, and here we should get a retrace to that level where the left shoulder bottomed, and I call that pattern the launch pad. This is why I put here my target box. You see, that was the area where price stopped on the previous decline. Not only that, I added here my favorite Fibonacci fan, and that was actually a nice confluence of those fibs. So that was my micro count, where I zoomed in and was watching the Russell on, I think, 500 tick bar chart, and I was still expecting to get my long back in that area. So 1 hour later I got my longs back. I think I bought even more than I actually sold in the morning here. The structure looked ugly, but this is what we normally see in wave B. Wave Bs have always ugly structures, and it's very difficult to expect that you would get a nice looking decline or ascent in wave B, because they are corrections, and in corrective waves there is always a rigorous fight between bulls and bears. So I bought it, and I started to expect a nice looking 5-wave rally out of that box into the target box. So the first move was ugly. It's very difficult, to count here something like ABC. We can count it in different waves, but I tend to count it as wave 1 up and 2 down. You see, the most important, once we bottomed in B, it became our very important stop for our longs, because if the decline penetrated that low, that would invalidate the whole count, because wave 2 shall never retrace more than 100% of the preceding ascent or in the wave 1. And here basically that low held. It was a really nice and deep retrace, but the low was not damaged. And now here from the bottom of wave 2 we finally have seen a very energetic and powerful rally in wave 3. Okay, so by open time on Tuesday, it's around 11 p.m. we got 5-wave looking rally in wave 4, and this is exactly what we expected 3 days before. We expected ABC corrective move up of the bottom around 1510, 1515. The problem here is that both legs of that correction looked super strong. Look at that, it's like almost parabolic move up. Here is the same, it's a really nice looking rally. And at that point, this is why I got fooled. I thought, what if we have already bottomed in wave 3? What if we have already started another rally, and that would be A, B, C up, and that would be wave 1? That made me start doubting my own count. This is why I added an alternative count, where it might not be the wave corrective 4 up, but it might be a start of impulsive rally, and this is wave 1. But at that point, when I posted the chart, I thought, okay, even if it was ABC up in wave 1, we should get a corrective wave 2, and waves 2 are normally deep, and waves 2 are shaped as ABC. And here I could say, okay, that might be counted as a 5-wave decline in A, then we should get a kind of ugly wave B up, and then another decline in wave C, and here I would go long. But at that point it was clear it doesn't make sense to go long here, because that decline might have been counted as 5-wave decline, and instead we expected that in case it's a bullish count, and here is unfolding wave 2, wave 2 should be shaped as ABC, and ABC should be a 3-wave move, and because we have 5-wave move, it could only be the first segment of that ABC decline. So I thought, okay, we should wait here. So a little bit later, I updated the count, and I thought, okay, this is my ugly wave B up, and once it gets here, it makes sense to go short, even under the bullish scenario, because wave C is 5-wave decline. It should look pretty steep and fast, and it always gives you enough opportunity to make money. And this is the path I expected back then. I thought, okay, we will bottom somewhere here and get there, and I will short Russell here. Next update, Tuesday around 1:30 p.m. Eastern Time. At that point it looked nice. I'm still waiting for another rally, but because we are inside a corrective wave B up, it does not make sense, just to play in musical chair game all the time. So that was a corrective wave 4 up, so the trend is down, and it was a kind of risky play to try to go long here. That's why I posted don't go long here, we inside wave B. What I meant is that not only we are inside a wave, corrective wave B, but we're expecting the last move in that wave B. So let's look at the chart I posted the next morning around 9:30 a.m. As you can see here, so last time we expected the very last segment in the subwave C of wave parenthesis B up. And in fact, we have not got it. So last chart was updated somewhere here, and I thought it will get a little bit higher than that, but it did not. It just broke down. It broke down, and we got a really fast and furious decline, and it could not be anything else than the wave 3. So actually, as soon as we got the decline and broke down that low, so it was clear that my alternative bullish count is dead, and I could safely come back to my primary count, where we are completing ABC decline of the January top. The good thing was that decline gave us a really nice structure to deal with. As I told you many times, the typical structure of the wave 5 is ABC, where A would bottom somewhere close to the level where the preceding bottom in wave 3 was made. And this is exactly what we got here. We got a really nice structure, which could be counted as 5 waves down, and it stopped very close to the previously made bottom. And at that point, I understood that we are going to see another ugly wave B up. So a little bit later, so that count was posted at 9:30, and at 1 p.m. We got the first move up, and as I mentioned, waves B are ugly, especially the first segment, the wave A of B. Look at that, it's really difficult to get 5 wave up here, even though it is supposed to be 5 way up, but because it's wave B, we can't be that strict. So finally we got another high, and so now that one could be 1, 2, A, B, C of 3, 4, A, B, and C of 5, and those 5 ugly waves up would comprise wave A of B. And here I posted this move up looks clearly corrective. The red box is a great shorting area. So finally on Wednesday I posted it after close, so we closed with the tape which would look like that ugly rally would extend and hopefully would finally get to the red box. And again, so it's Thursday, 8:30 a.m. Eastern time. Overnight it did not make big advancement, but moved a little bit higher again, up to the previous high, and look at that, like one high, 2, 3, 4, 5 times it tried to breach that resistance around 1520 something, 2022 probably. It basically, I don't watch that stuff at all, so I'm watching the count, and my count tells me that it's ABC up, and this is my target box, and we have just sit on our hands and wait until price gets into the box. Here we are. So it's 11 a.m. Thursday, and we are almost there, but not yet. And so this is finally where we closed. I did not update the count in the afternoon Friday because I just didn't work, and I've just updated it now when I'm recording that video on Saturday, just to add it to the video and explain how nicely we topped into the target box. Remember, we set that box days before. We expected that ugly structure in wave B up parenthesis B up, and that segment was pretty nice. This is normally what happens with wave C's in ABC structures. Wave C is normally shaped as a 5 wave, and 5 wave means impulsive wave with nice proportions. You see A, B, C of 1, 2, A of 3, B of 3, C of 3, wave 4 down, A, B, and C, wave 5, and those together are 5 waves up of C of parenthesis B. Not only that, but even before closed, the price dropped out of the target box in the structure which could be easily counted as ABC down, and I put a count of 1 because remember we are talking about wave 5, and wave 5 is structured as A, B, and C. Another distinctive feature of the wave 5, when we have that corrective move in wave B up, it should never breach that limit. This is our hard stop. Price should stop under that level. If it breaches that level, that would invalidate the count, and that would most likely mean that we are not going to get a lower low as we currently expecting here. Unfortunately, again, because we are dealing with wave B, we still cannot say that we have already completed that B. I would not be surprised if we get another high on Monday, but I will keep staying bearish as long as we are under that line 1557.65. In ideal world, we have already topped, and here we should get a nicely looking 5-wave decline. Remember I told you that the third leg in ABC move should always be 5-wave move. And remember I explained you that, for example, looking at that ABC, that first A is ugly, B is ugly, but C is strong, powerful. It covers longer distance than the preceding leg in the same direction. So here, if we zoom out, that was our first leg, our second leg, and our third leg. So that leg should get longer than that leg, and normally it gets to 123.6 extension of that A count starting from here, but in some cases it can stretch even to 200% extension of the first leg in that direction, or even 223.6, or in some cases even 261.8% of the first leg of A. I hope that we would not get that extreme drop here. So I have currently a nice confluence of FIBs around 1484 until 1469, and let's see how it goes. So in ideal world we will get higher, maybe we will open with some gap up, but we will hold under the top made on Friday, and then we will start the most powerful part of the decline in wave 3, which should be shaped as ABC, something like A, B, and C. But again, the most important part of that count is that stop. Once we get that wave 3 down and corrective looking pullback up, we would move our stop here, and we would start counting the very last 3 squiggles, A down, B up, and C down. Again, once we make that B up, we will set our stop for shorts and our buy stop on that level. And once, if we get here, and if we start that final decline, which should be nano 5 down, because again this is wave C, it should have 5-wave structure, we would be keeping a very close eye on that move down, and we would be trailing that move down, of course, if we get here. But so far so good. It has been moving along the path. We actually nailed that structure. and I hope, you know, the structure would not betray us and we would get that final bearish resolution, because it would be a great opportunity to go long, regardless of whether that big move was ABC, corrective ABC down, or it was just a beginning of a bigger correction. Because what might happen is that ABC is just the wave one. Remember, I just discussed with you how I got fooled at that point. I thought, okay, what if it's ABC up of a new rally? So here we can get into the same trap. So basically we expected ABC down of the January top, but it's always like that, you know, our brains always get fooled by that. We expected that move, but when we get the resolution and when we get to the target box, we start to doubt, we start to think, okay, what if it was just the beginning of the story? What the decline looks really strong and it does not look finished. But even in that case, even if it's indeed just the beginning of a bearish count and it's not my primary count, we still should get a really nice corrective looking move up, maybe at least to 50% of that whole decline of the January low. So that's why I hope that we would get that last wave C down, and I plan to load here on TNA, on IWM calls, and to ride that corrective or impulsive move up. Thank you very much, guys. Thank you for your time. I'm really glad you're watching this video. So please post your questions under that video in a YouTube comment section. You can also send me direct email to castawaytrader@gmail.com. I will be happy to answer your questions and maybe just to revise your count if you try yourself in Harmonic Elliott Wave. Good luck with your trading. Please don't forget to check from time to time my website www.castawaytrader.com, and please follow me on Twitter, Castaway Trader, and on Stock Tweets. Thank you.